Self-regulatory organizations or SROs have emerged as a major area of focus for the Reserve Bank of India. On Monday, it released the draft framework for SROs in the fintech space. According to Mint Road, by pivoting towards a culture of self-governance, fintechs could proactively set an either to industry standards and best practices. This approach could empower them to demonstrate commitment to responsible conduct and innovation even in the absence of formal regulation. Through collaboration, the industry could collectively identify and address challenges, foster an environment where innovation flourishes, and guide a shared commitment to ethical business practices.
So in last few years, the credit market have expanded phenomenally, not just in terms of scale, but the sheer diversity, the complexity, the number of supply side player, and the way consumers are accessing credit. This also means that what we have today is a market which is highly diverse. The speed is paramount, and in that context, it's important that regulations, compliances, and oversight of the industry is in tandem with the market and vice versa. And therefore, I think the regulatory framework which RBI has put in for SROs is really a vote of confidence in the market to say that they have important player to ensure that financial market grow in a very responsible and healthy manner. So it's really about regulator and market coming together and ensuring what is right for the sector as a whole.
Mint Road had, on the 21st of December 2023, flagged the role of SROs to strengthen the compliance culture in regulated entities or REs to provide a consultative platform for policy making. Now it has issued an omnibus framework for SROs. In the fintech sector, FACE and the Digital Lenders Association of India have approached the RBI for SRO status. There have been whispers that the Indian Banks Association or IBA and the Payments Council of India (PCI) are also to set up an SRO for digital payments jointly. It looks like more than one SRO for every sector may well be the norm. Microfinance institutions have two SROs, Microfinance Institutions Network and Southern. But there are a few issues as well. They are as follows. Let's take the case of independent directors. According to RBI's Omnibus framework, at least a third of SRO's board of directors, including the chairperson, must be independent. This will increase the demand for IDs in financial services, but also the issue: just how many will raise their hands to join the board of an SRO? Well, in the case of private banks, independent directors are said to have expressed the view that they have day jobs too and it is not worth their time to get involved in executive matters. Industry sources believe that only a few will be willing to be on the board of an SRO. Remuneration will be a sticking point and their expected job will be onerous, given the premium Mint Road now places on governance.
So, I can talk on behalf of FACE, where we already have more than 50% of independent directors. The very idea is that, independent directors can see, beyond the narrow interest of business and really work for the sector. That per se, I don't see a problem as a whole for industry association. Attracting that kind of talent should not be a problem.
It is early days in the SRO journey, but it will be interesting.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.